Alright, hi everyone. Welcome back to PKFX YouTube trading channel. So this will be a continuation for the trade update. And in fact, today I would like to share a very important lesson learned. So this is a trade update for GBPUSD that we have been holding over the weekend. So on Friday, the market was actually in profits. And in fact, I said that since the market has rallied quite significantly to about 1 to 2, when it was about to close on Friday night, it was about 1 to 2 in profits. So despite the fact that my target was not reached yet, but the target was 1 to 3.75, and since we were already in significant profits, I've decided to move the stop loss to 1.34100, the yellow line over here, as you can see, which is slightly above the break-even point. All right. And I mentioned that the reason for this move is because I would like to save on this capital that I have risked over here. And in case if the market chooses to reverse on me later when the market opens back again, right, at least I'll close on break even or a small profits, which is better than losing the entire capital. And I can use that money for another new trade, right? So that was the plan. But to be honest, I was not expecting the market to reverse. I was expecting some sort of a retest on this structure point and for the market to continue to break upwards and eventually hit our 1 to 3.75 risk to reward ratio. Because I believe if I see in the daily candlesticks, this triangle pattern is yet to play out, right? So I did mention that there is a chance for the market to reverse back to retest this triangle pattern to confirm the breakout before making the next move. If it came all the way down here, this would have been the next entry point. But because the daily EMA was also coming in as a strong support, and if I go to the weekly candlestick, the weekly candlestick also coming in as a strong support, I really doubted that it will come all the way down. So I was betting that the market is going to go up. So that was the trade that I was holding. Now, what happened and what is the lesson learned over here? Now, unfortunately, if I go to the 30 minutes candlestick, when the market actually opened over here, right, the market had a huge move downwards. So this is in trading view, but if you see in the MetaTrader 5, MT5 or MT4, this is actually a gap. This is actually an overnight weekend gap. The market literally opened down here, which is you see this long wick over here, right over here, which I marked as the red line, which was the gap opening. So I marked over here as weekend gap stopped out. So what happened is, even though the stop loss was moved to 1.34100, the yellow line, right, because the weekend gap opened way below, right, by the time the market triggered the stop loss, it already ate up almost 50% of the capital and it closed out the trade. So this is the sad part for this particular trade, because as you can see, what eventually happened is the market continued to rally, and in fact right now, as the market has already opened and continued to rally, it is literally heading towards our TP. It's already at 1.26 1 to 2.61 risk to reward ratio, and I'm pretty confident that it's going to go all the way up here, right? So to me, this should have been a winning trade. In fact, the direction that we targeted for was actually correct. Unfortunately, the decision to move to secure the capital over here, right, was taken over by the weekend gap. So this can happen, not necessarily all the time, but this can definitely happen. Now, the lesson learned that I want to highlight over here is, if we already know that we are in a significant profit, which is like 1 to 2 risk to reward, that is actually a good amount to secure the capital as well, right? Because we can never predict what the market is going to do when the market opens the following week. So to be fair, I've updated this particular trade as a loss. In fact, I'll pull out the journaling. So you can see over here, I mentioned GBPUSD, which I bought. The exit price was actually the market opening gap that passed beyond the break-even stop loss that I moved. So it wiped out almost 50% of the stop loss that I risked. So basically, there was a loss out of nothing for no reason, right? And I marked here, the market rallied up to 1 to 2 risk to reward and was in good profits. I moved the stop loss to be slightly above break-even to be on profits. right? To be a risk-free trade, like I explained in the previous video, before the night close. Unfortunately, the weekend opening gap gapped 50% below the stop loss that I moved, all right? It gapped 50% below anyway, so it triggered the loss anyway. So these are some of the things that can happen to anyone, and it is good that you're seeing this now. If you're a trader, if you're a beginner trader, understand that such thing can happen, all right? This is something that you can never control, right? This weekend gap that you're seeing over here, this sort of opening, because I have the no gap candlesticks pattern right now, you cannot see over here, but if you open in MT4 or MT5 or C Trader, the app that you use to open and close the trades, you will see this candle, this long candle wouldn't be there. The market would have opened over here, gap down before moving up. So this is actually a gap fill that has happened, and the market continued to rally upwards now. So unfortunately, a winning trade turned into a losing trade. But when we come to the journaling part of it, we have to be honest in our journaling, and we have to also mention the lesson learned. So these are the ways that we can improve our edge and use the lesson learned for future trades, so that we do not repeat the same mistakes, right? And you can only find and figure out this sort of lessons learned only when you execute, only when you actually do it, right? So that is why it's very, very important to go hands-on on a live market, to understand the emotion, the psychology, and everything involved when you take a trade. And always take proper risk management and proper money management based on what you can afford to risk for certain trades, because something like this happening, you can never prevent that. And let's say, for example, this particular trade, if you bet like 50% of your portfolio, that's it, you're screwed, man. These are some of the things that you need to learn. All right, so it's also something that I'm learning today, right? It doesn't matter how good of a trader you are, how professional discipline you have, what sort of trader you are. These are some of the things that you can never go against the market. Market is just market. It does what it want to do, right? So lesson learned over here: consider not holding over the weekends and secure profits if the market is in good profits by Friday night, few hours before the market close. Now, why do I say few hours before the market close? Because I've also noticed in my years of trading that when the market is about to close, a few hours before the market close, the spread starts to go wider and wider and wider. So if you choose to close right like 10-15 minutes before the market actually closes, you end up like securing less profits than what you're supposed to be securing because of the spread difference itself. So if you see like you are already reaching 1 to 2 risk to reward, that's a good amount. In this case, that should have been it. But again, once again, it's my decision to continue to hold, where I thought the move of the stop loss was a smart move. But in this case, it backfired on me. I got gapped out, and it eventually moved to the direction that I wanted. So could have been a fantastic trade, to be very honest, over here, 1 to 3.75, which is happening right now. So it's a bit painful to look at it, but it is what it is. And man, we'll always have another trade. So we leave it as it is, right? So we move forward. So that's GBPUSD trade update. The next trade that I also took when this market went down on a sell, NZDUSD, I went in for a sell, and this also did backfire on me because, as you know, the market already reversed by now. So this lined up perfectly for the 30 minutes, 1 hour, 2 hour, and 4 hour candlesticks, all as a sell, but the daily was still a buy, right? So when I saw the shift of structure here for the sell, I wait for the market pull back, and then I entered over here, and the market did come back down, right? It did give me some sort of a profits. However, the market decided to turn back to buy and continue rallying upwards. Now, one of the main reasons for this is, I believe, the 2 hour EMA and the 4 hour EMA, right? At the point of entry, instead of being a resistance for a sell, right? Instead of being a resistance up here for a sell, it acted as a support for a buy and pushed the market upwards. Same goes for the 4 hours as well, right? It was pushing the market upwards, right? So again, with proper risk management and proper risk percentage, this is a reasonable loss. I'm willing to take this as a loss. The market, you can see the 4 hour sell also has already shifted now to a buy. It's no longer a buy and continuing the momentum to keep going as a buy. So even the 4 hour candlestick has already changed from a sell to a buy. So this is no longer applicable. The trade loss well taken, and I've updated the journal as well. as another loss. And this is the most important thing, right? We gotta be very, very honest to ourselves when we journal these trades, right? We mentioned that yes, we entered during the London session, we sell, we had very good confluences based on our strategy. This is the entry point, stop loss, take profits, the amount that we are risking and the reward, everything. We have to mention everything in detail, all right? But mainly our emotion, right? Did I take the risk? Did I take the trade because I was revenge trading on this previous loss? No, I took this trade in a very calm situation. Therefore, I updated. I was calm as I was only risking 0.5% of the entire portfolio, so it doesn't matter. It's a small amount, right? The trade reason: the daily is a buy, but daily EMA held as resistance and market opened by reversing. Now, what do I mean by that? The daily candlestick was a buy, right? The daily candlestick was a buy, but the last candle that closed above the EMA closed back below the EMA when the market closed on Friday. So this indicated to me that some sort of a pullback coming down. I was expecting the market to retest this structure point before it continued its rally upwards. But unfortunately, over here, even in this case, the triangle looks like it's playing out as well, and it's probably going to keep rallying upwards all the way from here. So this trade also, I mentioned clearly what can go wrong. The 2-hour and the 4-hour EMA was support and need to be broken. During entry, 30 minutes, 1-hour EMA was resistance, so it was in my favor. Daily and weekly EMA as main resistance as well was also in my favor. But looks like, the probability of this acting as a resistance didn't act as a resistance. It now turning into a support. So these are moments where the market is shifting, but it's okay if you take this loss because it's only Monday right now. As long as you're recording the results properly, right? Over here, I mentioned the market respected the 2-hour and 4-hour EMA and reversed back to buy momentum and hit stop loss. Lesson learned: try to not go against the 2-hour and 4-hour EMA and look for different trade, as this is added dynamic resistance to hit TP. So again, like I said over here, if you know that the 2-hour EMA, let me zoom in. If you know that the 2-hour EMA is still down here, you're going to enter up here. Eventually, when you come down here, it's going to act as a resistance, and you can see that is clearly what it did. Of course, I was betting for the market to continue the momentum downwards and break this, right? But until it breaks properly, like a candle closure like this, it's not a proper break. A wick is nothing, right? It could have just wicked it for like 5 seconds, 10 seconds. We don't know, right? A proper candle closure is when you can say, okay, this EMA is broken and now the candle has closed below. The candle still acted, the EMA still acted as a support, and the market continued to rally upwards. So this is another loss that I've taken. Even the head and shoulders pattern did not play out. It didn't come back to retest to go back down. So none of the pattern played out and the market simply reversed. So it is what it is, a loss I'm willing to take because it didn't just wick me out. It literally, going to the upward direction now. So I'm cool with this. So as long as you're taking losses and you're not looking at the monetary value and you're looking at the candlestick patterns and you're understanding the moves properly and you can implement the lesson learned in the future trades, you're all good. So this is the most important thing. Continue to build the journal. So I hope you guys can continue to follow my trades and follow the journaling as well, so that you can learn your personal edge as well. Like the same way that I'm journaling my trades, you can also journal your personal trades and start to build the edge, because all these are the data that we're collecting. Every single loss is a data to improve further, to analyze further, and eventually build a profitable edge. You got to remember that we need at least 100 trades before we can say, hey, this is the strategy that I'm going to go forward with. This is the currency pair that I'm going to trade the most because I see a lot of wins in this pair. For somehow this particular currency pair, this particular timing, this particular lot sizes works for me. When I open this particular session, it works for me. Buy trades tend to work more better than a sell trade. So all this kind of information, how do you get it? By journaling, right? And simply taking 10, 20, 30 trades is nothing. We need at least, at minimum, 100 trades and beyond, right? The more the trades that you have, the more accurate your data. So it's all about the data. So that's about it, guys. That's the trade update. It's only Monday, so we will see if there's any potential trades in the future. I'll check on it. I'll keep an eye. But for now, this is the trade update. And thank you so much for your time, guys. Also, I've been updating a few videos. This will be very basic forex trading videos. You can find it in my channel, Introduction to Forex. So if you have your friends who are trying to learn forex, these are very simple 5 minutes animation video that I'm doing. They can subscribe to the YouTube channel PKFX and they can learn this. You can share with your friends as well. All right, thank you. Have a good day.